Welcome to the inaugural summit on navigating the 1099 CRNA landscape, insights and strategies for success. Let's look ahead to 2025. I'm Sharon Pierce, past president of the AANA and co-host of Beyond the Mask podcast. I'll be your moderator for tonight's discussion. If you have questions, please drop them in the Q&A along the bottom of the screen. Over the next 90 minutes, we'll explore the 1099 CRNA landscape with three expert panelists. Jeremy Stanley, tax and financial advisor and my Beyond the Mask co-host. Tracy Young, business owner, entrepreneur, and AANA Board of Directors member. John Culbertson, Vice President of AANA Insurance Services. We're thrilled to have you join us for this informative session designed to equip 1099 CRNAs with the essential knowledge and tools for success. Let's go ahead and dive right in. Jeremy?
Well, Sharon, thank you. Thank you for that introduction and background. This is going to be our agenda for the evening. We're going to cover first the 1099 CRNA industry and compensation, updates and opportunities. Then I'll be up and we'll talk a little bit about 2025 tax and retirement changes and savings, things that 1099 should know. And then we'll end on navigating the 1099 malpractice insurance decisions. At the end, time permitting, we will be answering questions. So with that, Tracy, welcome. It's always a pleasure to see you. I know you've had a very busy day today, and we really thank you for your time. And let's talk a little bit about what's going on in the 1099 industry. How's the demand right now? And what do you see as the outlook for 1099s as we move forward throughout the year?
Hey, Jeremy and Sharon, thanks for having me, and great question. You mentioned the busy day today. I'm actually at the American Hospital Association rural meeting talking about CRNAs, and most of the people that came up to me today asked the exact same thing. They said, okay, can you make more CRNAs for us? We're short. These were rural hospitals from Oregon to West Virginia and everywhere in between. So to answer your question in short, the demand is still high. Especially for 1099 CRNAs. What I am seeing in most markets, though, because it is pretty market dependent, is some markets are starting to stabilize, where the demand is still high, but it's no longer increasing as rapidly as it has been over the last 6 months or 9 months. And what we're seeing in many of our markets is a bit of a stabilization. So we're still needing 1099 CRNAs. We're just not needing to add as many and as frequently as we have in the past. One of the stats I read today is we've historically, over the last 5 or so years, we've graduated about 2,500 CRNAs a year coming into the profession. Last year, it was almost 3,000. It was about 2,900. We're predicting well over 3,000 for the next several years coming. So as these new grads graduate, 90-something% of them are not going into the 1099 market. They're going to take W-2 jobs. As the W-2 jobs get taken, some of the 1099 jobs are going to start to maybe dry up a little bit in some markets, while the demand will still be high in other markets. So yeah, demand's high still, but starting to stabilize would be my answer from what I'm seeing across many markets.
Hey, Tracy, I'm just going to interject one second. We are seeing, you said 90% of new residents graduating. We have seen over the last few years more and more new grads taking 1099 positions around the country, which is interesting. I remember 10 years ago, or maybe even 5 years ago, you would never see that, which I found very interesting throughout the process here. You want to talk about that just a little bit?
Sure. I'm a bit of an anomaly. And 25 years ago, when I graduated, I went straight 1099. So there's always outliers. I wasn't traveling locums, but it was a full-time 1099 gig. And I even got to bill for my own OB services as well, too, outside of the OR. So it was a pretty unique experience. But you're 100% right. More new grads are considering the 1099 market. Not many of them are ready to jump into the 1099 traveling locums market whenever they graduate. And I think a bit of a misconception a lot of times with CRNAs is they equate 1099 as being locums. but they're long-term assignments, year-long or permanent contracts that can still be reimbursed on a 1099 basis or compensated.
Well, we'll dive a little bit deeper into what the outlook looks like going forward, but I'm gonna ask the question everybody wants to know the answer to. What are the trends in CRNA pay rates right now for 1099?
So the trends have been going up, up, and up. Everyone here, ANA members, if you complete the ANA compensation survey, you get it for free. And you can see over the last 3 to 4 years, we've seen 15, 20%, 25% increase in compensation for 1099 independent contractors. And what we're also starting to see, though, in many markets is some of those trends are starting to stabilize. It's anecdotal, but we're not seeing the rise quite as severe as it has been over the last, call it 2 years. Many of our contracts, we were renegotiating every 6 months just to keep the pace of the growing increase in 1099 compensation. The What we're seeing in a lot of markets too, a little bit maybe tied into this as well. We're not seeing hospitals change anesthesia groups as often and as quickly as they have been historically as well too. This last year that started slowing down a little bit. And what happens is when a hospital, well, and there's numerous reasons why they're not changing, mainly it's economics. It's expensive to do an anesthesia transition, to bring in locums. So hospitals are now starting to reconsider and maybe keeping a service they're not 100% satisfied with, but they're keeping it due to cost issues and those. But when a hospital changes anesthesia groups, usually the new group that comes in raises pay rates to be able to recruit and to be able to retain the ones that are there and to be able to attract the talent that those hospitals need. Well, when they raise those pay rates through this transition, what do the other hospitals in the area have to do? 6 months later, they have to raise theirs to be able to make sure they could continue to meet their needs and their demands. And this cycle's been happening a lot in the last 3 years. It slowed down a little bit in the last year or so. And I think that may be leading to a little bit of stabilization in some of the 1099 compensation that we're seeing.
Hey, Tracy, just to add on to that, we're seeing those pay rates stabilize. And, from everything I can see, typically in the 1099 market, you're somewhere between 200 an hour and 250 an hour. There's some obviously outliers on each side of that, but we're not really seeing the trend down. It's just kind of staying the same, and you're not getting those 10, 15% bumps. Maybe you get inflationary bumps as we go along. Is that what I'm hearing you say?
Exactly. Yeah,
Okay.
exactly.
Okay.
Well, I wonder, and I say this because it's my experience of me being 1099. I'm working more than I ever thought I wanted to work. And, I said I was only going to do 3 days a week. Somehow it creeped up to 4. Now it's creeped up to 5 because it's hard to say no to the money, right? So I wonder if that's helping stabilize it because I'm telling you, eventually I'm going to drop back to my 3 or 4 days a week. So just throwing that out there from personal experience. What are your thoughts, Tracy?
No, I think that makes perfect sense, right? It ties into human nature and human desires. And it is harder to say no to these high incomes and some of the high hourly rates. And, the old saying is make hay while the sun's shining. And definitely we're probably seeing a lot of CRNAs doing that as well, too.
We had a question come through about what's the yearly pay. Friend, the yearly pay is as much as you want to work, okay? Because as 1099, you eat what you kill, right? So I can make as little or as much money as I'm willing to work.
That's
So there's probably hot spots out there, Tracy. Has the AANA identified those hot spots?
So we really haven't identified specific hotspots, but what we see in the industry is as far as 1099 growth, the demand is there for dental anesthesia. The
Mm.
demand is there for plastics. These are kind of a high degree of 1099. But we're
Yeah.
also seeing certain regions of the country. they're falling behind potentially on new graduates, or they're having out migration of CRNAs for one reason or the other. Maybe it's scope of practice issues. Anytime there's an out migration or there's a higher demand for CRNAs, the demand for 1099 is going to go up, the compensation is going to go up. So we're seeing it in different markets and in different areas, but we haven't. There's been no like study to pinpoint precisely where demand is the hottest at the moment.
Yeah, I'll tell you something else, Tracy. It's been interesting from our viewpoint. We have seen, groups come in pretty much on a consistent basis in the last 18 months, and they're taking over the anesthesia practice at the facility, and they're converting all their W-2s to 1099. And we've seen this quite a lot. Have you seen this around the country as well?
I have, and from personal experience, we probably a large percentage of our CRNAs and our physician anesthesiologists are all 1099. So when we take over many contracts, sometimes we go 1099 route, but then we have some facilities that are pure W-2. Usually we let the providers kind of dictate that to us, and then how we arrange the contracts, how we arrange their scheduling gets changed a little bit depending on those factors. But for us, if we were to convert, we have 140 hospitals in 6 states. If we were to start converting all of them to W-2 only, we'd lose a large percentage of our CRNAs. They really enjoy the 1099 lifestyle, the tax benefits, the autonomy that kind of goes along with it. The employee-employer relationship doesn't exist. We don't dictate hours. Our CRNAs don't punch clocks. They meet the needs of the facilities of where they are.
Yeah, yeah. All right. Well, I know we can talk about this stuff forever. We are on a time schedule, but I want to transition now and talk a little bit about QZ billing and the impact of reimbursement rates. I mean, we've seen so much about this in the last few months, and I'd love for you to talk about it and how that could impact the 1099 market. I know I've seen some stuff on Facebook going back and forth. I've talked to several people about it. I know we've conversed about it. What are your thoughts about it, Tracy?
Yeah, so we could probably dedicate an hour to QZ
Yeah.
building and some of the impacts of what's happening there. In general, so for those that may not know, QZ just means it's a billing term, and it's a code that goes on the billing document that says the CRNA is not medically directed. That's all it means. And what we're seeing in the marketplace, there's a trend for commercial insurers to try and start reducing or paying less for QZ services. Most are saying 85% of the physician's fee schedule, so that's a 15% reduction. Well, at this moment, we're not seeing that affect 1099 CRNA compensation. But what we are fearful and what it may start impacting is how hospitals start or how they determine what staffing model they're going to use. And are they going to start using medical direction because it's going to get reimbursed at 15% more? And it becomes a math problem, really. And, why would insurance companies want to reduce CRNA reimbursement? The answer is pretty simple: money. That 15% goes directly to their bottom line. It doesn't go anywhere else. And CRNAs aren't taking a 15% pay cut when they're working in a QZ model, a non-medically directed model. So hospitals are having to foot that difference and to foot that bill to be able to make up the difference for those reimbursement cuts. So that's the why. And there may be some political interest telling insurance companies you can do this and it'll hurt CRNAs as well. But the true answer is it's pure profit for them whenever they do that. Why is it a bad thing for us? Well, if it incentivizes medical direction, CRNAs and medical direction have the least autonomy, the least respect, quite frequently and quite often, and we're not seen as the experts in anesthesia. So what we want to do as an association is we want to make sure CRNAs get reimbursed to the full extent for the services that they're providing so that we're seen as the experts in anesthesia, and we don't disincentivize the use of CRNAs, right? We provide a value proposition to the healthcare system. And if we're going to get reimbursed less for the services we provide, we start losing some of that value proposition.
I'm going to ask you a off-topic question here about this, Tracy. If you get rid of QZ billing, then that's basically an anesthesiologist job protection act, really. So your models, we know that certain models cost more. So how would that, it seems like it'd still be more expensive, right? Because you got to have anesthesiologists for the 4-to-1.
Potentially, right? But there's a lot of QZ models where there may be one anesthesiologist in 5 rooms, or maybe one anesthesiologist overseeing 7 rooms. And if there's a 15% reduction in all 7 of these rooms, it becomes a math problem for the 15% increase in reimbursement for medical direction. Is it enough to offset hiring
Right.
one more anesthesiologist to get 1-to-4 and 1-to-4? So there's a bunch of unique situations. The math will almost never work in a rural hospital where there's just a couple of CRNAs practicing. But there's certain models where the math gets kind of intriguing and it's troublesome for us as a profession. That's why we're fighting so hard to make sure that this doesn't happen, that we can reverse it.
Exactly. So let's get back to talking about 1099 per se. And where are we seeing the most need for 1099 CRNAs at this particular juncture?
Yeah. So again, I think, from a practice standpoint, dental offices, 1099. A lot of GI centers are kind of hiring a bunch of 1099 CRNAs, plastic surgery centers, 1099. Beyond that, it's facilities that are just having a hard time with recruiting and retention. They're having to
Oh,
bring
I'm
in,
I'm
you know,
sorry, go ahead.
yeah, go ahead. Well,
I'm I'm thinking
go ahead.
that ASCs might be having an increased need because they're popping up everywhere with CON laws going away. Are you
Yep,
seeing that?
we are. And historically, ASCs have always been the easiest to recruit to. No call, no nights, no weekend, no holidays. Being good stewards of their time. They're letting surgeons go to the hospital first, show up late, and then start to, run cases till 5, 6, 7 o'clock at night. So the quality of life that used to be there for these area, even hospitals in the, like, you may have a geographic area where the shortage may not be terrible, but there may be 1 or 2 hospitals in that geographic area that have a bad reputation, maybe a bad culture, maybe the scope is more restricted than some of the others. And when they can't recruit and retain, the only answer is to go to the 1099 market if they're not going to fix their issues. So those are hotspots as well.
Yeah, Tracy, are there any changes in hospital or ASC policies impacting 1099 hiring right now?
So great question. And it's something to ponder a little bit. We're seeing some hospitals say we won't independently contract with you as a solo 1099 CRNA. You have to go through an agency. A relatively newer trend that we're seeing starting to increase. We're also seeing a lot of the major national groups starting to say we have our own in-house agency. We won't contract with you for the group, but we'll contract with you through our agency, those types of things. Some of those policies are popping up. One of the things that's not necessarily policy related, but it's hospital and ASC related that's causing issues for 1099 is credentialing time.
Yeah.
We're seeing facilities routinely take 90 days and much longer sometimes to get credentials for 1099 CRNAs. That makes it really difficult to start planning your work schedule, planning which facilities you're going to go to. So it may not be purely policy driven, but indirect way, credentialing and there's a policy surrounding credentialing and what they need to do. That issue as well too.
Let's go back to talking about some of the bills that we're seeing arise out of some of these states. Several states have proposed bills to prohibit insurance companies from setting time restrictions for anesthesia payment coverage. How would this be detrimental to the locums market?
So I don't think it would be detrimental, right? A couple of insurance companies tried to come out with a policy that said if the case goes too long, we're only going to reimburse anesthesia for what's the national average of what that case should be. Well, those have been reversed because the outcry has been pretty strong, and in some of the states are actually trying to pass laws saying you're not allowed to do that. As long as we're able to get reimbursed for the services we provide during the time that we're providing them, that should help prop up the market for CRNA's compensation across the board.
Well, nobody will want to give anesthesia for the slow surgeons, is the way I see this happening.
Yeah, yeah,
Yeah.
good point.
Tracy, as we talk a little bit more about this, we're seeing more and more states go the opt-out route. I mean, Virginia, Florida. Does this mean more autonomous 1099 opportunities for CRNAs out there? I mean, the more opt-outs we see, I mean, this trend is snowballing around the country, which is probably leads into a lot of other conversations about AAs and anesthesiologists and why some things are going on the way they are. But because of this, does this mean there are going to be more opportunities for CRNAs to work autonomously?
Jeremy, I think it does. And here's the rationale. I've converted, I don't know, our company, we've converted probably 40 or 50 hospitals to either CRNA only from an anesthesia care team or from physician only to a loose anesthesia care team. And what opt-out does is it makes that conversation and makes those decisions a little bit easier for the decision makers. Every time we do it, we get asked the same two questions. Will my patients be safe? Or will I, as a surgeon, now be liable for your anesthesia because you're just a nurse? Those are the same two questions we get all the time. Under opt-out, there's no supervision requirement, so it makes the liability question even easier to answer than it does before. And there's case law going back to the 1980s and 90s, captain of the ship doctrine, we can get into that.
Yeah.
But once that illusion of supervision requirement that Medicare requires that you're opting out of, once that is removed, that's one barrier that it just clicks for surgeon. Oh, I'm no longer your supervising physician. So does that make sense?
Absolutely.
All right, we talked a little bit about us reaching equilibrium. We've seen several different hypotheses on that. Some think we'll reach equilibrium in 2027. Some are pushing it out to 2030 based on HRSA's views. What are your thoughts on this, Tracy?
My thoughts are I have way more questions than answers, Sharon. So,
Oh, you're getting political and doing such a good job at it, Tracy.
so the studies contradict themselves. Some say, like Hurst was saying, by 2027, so that's 2 years from now, that we're going to be in an oversupply. And then there's other studies that are done by other workforce analysis that are saying it's going to take us way out to the 2030s
Yes.
before we start reaching equilibrium. So for me, it's all about the assumptions and the predictions that go into the studies. The supply side, we kind of know the growth of the supply side fairly well. We look at the COA reports, we see how many new schools are coming online, we see the cohort sizes increases, we see graduates going up. That's the supply side coming in. Opposite side of that is what are the supply side leaving the market? How many retirements? And those the things that determine who leaves the market from a CRNA standpoint is multivariable, right? The stock market has a big factor on that. CRNAs reach their magic number. They may drop to part-time or may drop out of the market completely in their retirement accounts. And Stanley's shaking his head. Jeremy, that's your specialty, right? Investments in retirements. But
Yep.
if there's a black swan event or we see a 20 or 30% correction in the market, CRNAs are going to be like, I thought I'd retire this year, but I'm going to stay longer. But if we see another 20% increase, we may see people leaving sooner. So that's the supply side, that's the people leaving side. The demand side is even way, way more complicated to try and predict. We've seen, the baby boomers started coming online. The baby boomers right now are, I believe, 69 to 79, 66 to 79 years of age. So
Oh, they're younger than
so
that.
Not that you're speaking
May
from
feel younger
experience.
than that. They may feel younger than that. But once the baby boomer age, after that trend, the number of births in the US dropped precipitously after the baby boomers, and they've stayed low ever since. So we're seeing this aging and aging population requiring more and more services. There's going to be a tipping point soon where that aging population is going to start, and it is going to start changing the demand of anesthesia. And then look, I could talk about this forever, but what are the GLP-1s going to do to the demand for anesthesia? Bariatric surgeons are already starting to go back and doing lap choles and some of these other things
Mm.
to be able to pay their house note, their boat note, and their second house note. Orthopedic surgeons, we may have much, much less knee arthroscopy and knee pain, back pain, spinal surgeries. All the things that we're doing endovascular now that don't require a big 6-hour open heart surgery. Maybe some of them don't even need anesthesia services. They can do nurse sedation. These things are going to continue to advance. We're going to get a whole lot more technology. We're going to get a lot more pharmaceuticals. We've not seen a lot of advances in the medicines that we give in anesthesia over the last 30 years, quite frankly. We've had a couple of things kind of come in, but we haven't had a major game changer. If we could get a safe, ultra safe sedation board, will we still be needed for gas, TGs? If we leave those markets because of something like that, we don't know could be coming. Plus, the whole flow is coming back to other markets. So I have more questions than answers. I that's my take.
Hey, Tracy, I'm gonna chime in here, because I really don't think there's a supply demand problem. I mean, if you had anesthesiologists working up to their scope and CRNAs, I think we'd have enough supply. So there's just a group that is not working um, up to where they could be working, and that could fix everything. But we know that's not going to happen. So therefore, here we are again. So lots of questions. I mean, I don't think anybody knows with great certainty what this market is going to do. I think to your point earlier, some markets are getting closer to equilibrium, and equilibrium doesn't mean that they're going down, it just means things are more equal. Um, and other markets aren't. And to try to project that out, I mean, to your point, who knows how many CRNAs are going to retire in the next 10 years? I mean, I think the industry projection is somewhere around 12%, but whether that's going to happen or not, I don't think really any of us know. So,
Right.
but all great points. I think we've seen a lot of debate about this. So I'm going to throw this one out there because I think if we see a reduction in MD anesthesiologist utilization, would that increase demand for CRNAs, especially on the 1099 side?
So it depends. If we're taking physician anesthesiologist out of personally delivering anesthesia, because this happens in a handful of markets currently, if we take them out of that role, then yes, they need to be replaced by CRNAs. That's the only answer, or by an AA in a medical direction model. But if we're taking physician anesthesiologists that are normally in a medical direction model, so 1 to 4, and we're spreading them out into 1 to 8 or 1 to 10, it's displacing anesthesia providers is what it's doing. Where do those anesthesiologists that get displaced, where do they end up? Do they go back to fellowship and just go do CV fellowships and do hearts? Do they do pediatric fellowships? Right now, pediatric fellowship anesthesiologists, they're some of the most in demand people on earth. They've passed these ACOG guidelines saying you have to have one if you're going to have a level 2 NICU and all these different things. So they're all of a sudden they're in demand. But if we're removing anesthesiologists from doing anesthesia, then yes, it's going to increase the demand for CRNAs. If we're spreading out their ratios of how they're supervising CRNAs, it may not have a whole lot of effect on our industry, quite frankly.
So we know that the average age of an anesthesiologist is over 55 years of age now. And they have kind of a low replenishment rate. Do you really think that the MDA's medical model can continue to work the way it is, or is this going to leave some room for CRNAs and thus 1099?
Yeah, another great question. They are matching at the highest rates over the last 3 to 4 years for anesthesias that they're having in demand in their supply as well too. So, but when we think about their practice and where they're going, I hypothesize that they're going to become more and more specialized. I think
Hmm.
the generalist anesthesiologists, they'll still be there, but there's going to be less and less of them, and more of them are going to go into these fellowships. One, chasing higher compensation, higher reimbursement, um, but two, the base of where we're doing anesthesia is so broad, and where we're going to continue to grow doing anesthesia as CRNAs. The more they specialize, the more it opens up doors for us to do everything else.
I agree. And Tracy, I'm going to hit you with one last one. We obviously know about HHS and what's going on there, and with Doge, the calls to, or Doge, calls to remove barriers and so forth. How does that affect this marketplace at the moment?
Well, I think that's yet to be seen. Like the conference I'm at today, the almost every lecture I sat in was talking about what is DC going to do to healthcare reimbursement, cutting funding to Medicaid, cutting funding to Medicare. There's a large amount of dissatisfaction with how healthcare in this country is being run, and there's a high degree of uncertainty of what the next 3 months, 6 months, and 1 or 2 years is going to look like. My hunch is this: there's inefficiencies in the anesthesia industry. We see it. Everybody on this call probably sees it. Medical direction is the least efficient model to deliver anesthesia care. The whole reason medical direction was created was for the government to figure out a way to pay someone to not do anesthesia, right? So it is a mechanism that is created to reimburse someone to watch someone else do anesthesia. So it's an inefficient model. My hunch is there's going to be some changes there. I don't have a crystal ball though. Um, if you're not at the table, you're probably for dinner. So we want to make sure we're at the table, that we're having these discussions with the policymakers and the legislators, so that the misperception or basically myths about CRNAs and what we can or can't do aren't being spoken in these people's ear. And then we get bad policy, bad regulation out of it that ends up hurting us. So I don't know the future with all the HHS changes. We are primed to be the answer to the problem, though, because we're a full service provider. We can bill QZ, we can go anywhere and deliver safe, high quality anesthesia. So that's the message we're trying to get out.
Great point, Tracy. Thank you. You always do a wonderful job, and we really appreciate your feedback on all this. And as we all know, we'll see where the future goes. But I think what we're discerning here is that at the moment, the 1099 side of things is still pretty good, albeit in the future at some point it could slow down. But for now, things still look pretty good on that side of the marketplace. So.
Well, I
Yeah,
think
I'd say
Tracy,
better. I'd say better than pretty good.
yeah.
I
Well,
mean, it's really good. It's stabilizing, but it's still really darn good.
Yeah.
and
Sorry,
I
Sharon.
think we had discussed earlier that there'll still be a 1099 market. There always has been. I've been in anesthesia for 35 years. There'll always be a market. Now, will it be as luscious as it is right now, where you can go anywhere and practice? Or, at times when it gets lean, you can still go to the rural parts or parts that people don't want to necessarily go to give anesthesia. Right now, you can go anywhere and everywhere. But I do think there will always be a 1099 market. There has in the last 35 years that I've been given anesthesia.
Yep. And for the next 35 years that you're given anesthesia, it will continue on, right, Sharon?
I don't think I'm going to do it 35 more years. Few more years.
Few more years. Few more years. All right. Well, let's change it up a little bit. I thought it would be interesting as we kind of went through this to also talk about some of the tax things. I mean, Tracy hit the nail on the head. Earlier, people make more money, and one of the reasons they like 1099 is because there are some tax advantages to doing 1099. So I thought tonight we just kind of hit the highlights of what's changed a little bit since last year into this year, and hopefully get you guys thinking and get your gears turning. Again, none of this is meant as a let me go out and act on it. Obviously, you've got to put it in place in your own situation, talk to your advisors, make sure you know exactly that this fits for you. We're not trying to give anybody any advice tonight. So, just one of the things that's changed, the standard deduction changed a little bit this year, went from 14,600 to 15, and then married filing jointly 29,200 to 30,000. They indexed this for inflation, so this was about a 2.8% increase in the standard deduction. So they do change these things. There is a little bit of rhyme or reason to the tax code. Um, Another thing I just kind of wanted to show, they do increase the brackets as well each year. Again, by inflation, you can see if you look from the left to the right, 2024 compared to 2025, what the brackets are. And I always tell people to make sure you understand what bracket you're actually in. There's two terms to kind of be aware of, and one is your marginal tax bracket. And your marginal is if I earned one more dollar, what would the tax bracket be for me? In other words, if I earned, $197,299, I'd be in the 24% bracket. I earned 197,300, I'd bump up to the 32% bracket. So I pay 32 cents on the dollar at that point. So being aware of that, and then actually because this table is graded, you want to know what your effective tax bracket is. I see a lot of posts out on Facebook about this. Well, my CPA got me down to this. Well, I paid this, and you really want to know what your effective is because these are graded tables. Overall, for all the money you made, how much tax did you pay versus how much money you made? And that's your effective. So if you made $1 million and you paid $200,000 in taxes, you're in the 20% effective tax bracket. Just important things to understand as you're going out. You're doing 1099. My wife's a CRNA, so she says, you talk about these numbers like everybody understands it, Jeremy. They're CRNAs, they don't get this stuff, but yes, I love it and I thrive off of it, and Sharon knows that. So the other things that I think are important for 1099s to understand is Social Security and the FICA wage base. The FICA wage base has been going up every year, and in fact, it goes up more than inflation. They base it off of inflation and wage growth trends. So this 6.2% that you pay as an employee and 6.2% you pay as an employer for a total of 12.4%. You actually increased this year by 4.4%. So that is continuing to go up. A lot of talk about how do you fix Social Security? Should they increase its wage base even more? Should it be unlimited? A lot of things going around this, but it's good for you guys to know and understand that, which is one of the reasons most of you, if you're 1099, probably have an S corp because you can kind of get around some of these taxes potentially. And then Medicare, it's 1.45 and 1.45 unlimited there. Section 179 of bonus depreciation. I always like to give an example here because it's kind of complicated. Then one of the things we see in our practices is a lot of CRNAs buying, an automobile for the business. And here we got John, he's a 1099 CRNA. He got a 2025 GMC Yukon for 100% business purposes, he says. He's got another car that he drives personally. This is just for business. The vehicle had a GVWR of 7,800 pounds. It cost $75,000. The reason that 7,800 pounds is important is because he can claim the 179 in 1 year if it's over 6,000 pounds. So when that amount is $31,300 in 2025, the remaining $43,700 can be depreciated using something we call bonus depreciation, which this year is 40%. Last year it was 60, the year before it was 80, the year before it was 100. Next year it'll be 20, and then supposedly it's going away in 2027. So he gets an additional $17,480. So basically, it reduces taxable income by $31,000 plus the $17,480. Assuming he's in a 24% tax bracket, he saves $11,700 for taxes. But remember that anytime you do this, the vehicle must be used over 50% of the time in business to qualify for this. Again, one of those things as a 1099 you might want to know. Retirement plan contribution limits went up this year. Solo 401k, which is what we see the majority of our CRNAs use, went up to $23,500 for an employee limit. There's a catch-up provision for those age 50 or older, $7,500. They came out with this new catch-up provision this year. They're always adding something new to confuse us all. $11,250 catch-up provision if you're 60 to 63. I know it makes it very complicated. And $70,000 is the maximum annual 401k limit. This is called the Section 415 limit. That includes the employee plus employer contributions. But if you're over age 50, that bumps up to $77,500. If you're age 60 to 63, that bumps up to $81,250. So that's the maximum you can get in your 401k for this year. The SEP contribution limit is $70,000, but no contributions allowed. Remember, the SEP is there's no employee contributions, there's just employer, subjected to about a 25% rate. So in order to get $70,000 in there, you've got to pay yourself a salary of $280,000 plus in order to do that. Could potentially cause more taxes that way, but you need to talk to your advisor about that. $280,000 is the maximum annual addition to a defined benefit plan, another type of retirement plan. If you're making a lot of money and want to sock away more than the $70,000 a year, this is a potential plan you could put up to $280,000 a year in. Other things that changed: annual gift exclusion, meaning you can give this amount of money to anybody you want to, free of the gift tax. Last year was $18,000, this year $19,000. Unified credit amount, this is the amount that you can pass free of estate taxes, the death tax when you die. It was $13,610,000. It went up to $13,990,000. And the estate tax bracket is 40% of estate taxes over that unified credit amount. Again, most of us never going to have to worry about that, but we hear about it and so forth. If you're a non-citizen or your non-citizen spouse, you can only give them $190,000. So, other things: health insurance, always a hot topic for 1099s. What type of plans should I choose? Health savings accounts, we see a lot of these days. In order to contribute to a HSA, you have to have a high deductible health insurance plan. That means your annual deductible has to be at least $1,650 if you're self-employed. Self-only coverage, or $3,300 for family coverage. And then there's another provision that the annual out-of-pocket expenses can't exceed $8,300 for self-only, $16,600 for family. If your plan is considered a high deductible health plan, you could put $4,300 into this HSA if it's only you, or if you have family coverage, you could put $8,550. Again, another way to help pay for medical expenses later on that could potentially also be used for retirement expenses if you don't use it for health coverage throughout that time as well. And another question we get a lot is about Roth IRAs. The majority of our CRNAs make too much money to do a traditional contribution limit to a Roth IRA, but that amount is $7,000. If you're over age 50, another catch up of $1,000. But if you make too much money, like I alluded to, in 2025, the phase out is $150,000 to $165,000, or married filing joint $236,000 to $246,000. There is a workaround on this called the backdoor Roth, a little beyond what we hope to cover tonight, but just know that if that's the case, talk to your advisor and mention that backdoor Roth, and maybe you could potentially do that as well. SALT deductions. Sharon, do you know what SALT stands for? Or did I lose you already?
I was muted. Something to put on my food?
There you go. It's called state and local taxes. This was a big hot button with, especially people that live up north or in very high tax rate states, um, because now there's an annual cap on that of $10,000 per year. If you're itemizing, this could potentially affect you if you're paying state and local taxes of more than $10,000 a year. Then you might pay 30,000, but you only get to deduct 10,000 of that. About 30% of households are affected by this. So not everybody, but a lot of people are affected by this. A lot of don't even know that, because if you add up how much state taxes you're paying, plus the local taxes you pay on your home, school taxes, a lot of us are paying a whole lot more than $10,000 a year. So unfortunately, we don't get to itemize that anymore. There's a lot of states doing workarounds now, but something to keep an eye on, especially as we move into this year and potential tax law changes are potentially coming. The Tax Cuts and Jobs Act was put into play in 2018. This lowered everybody's tax brackets across the board. Pretty much everybody's taxes went down because of this. This is due to expire at the end of 2025. The Republicans, obviously, at this point have the majority. They would like to pass this. More than likely, they're going to kind of extend this. For how long, we don't know. It would be one of the, if they didn't extend it, starting in 2026, it would be a very large tax increase for the majority of people. So we'll see what happens here. And obviously, at this point, we're not sure, but there's a high probability that this could get extended based upon the political climate right now. Another thing to be aware of is capital gains tax. If you sell something to make money on it, if your tax rate, you're in the 0% tax rate, if you have no income, or up to $48,350, you pay zero tax on capital gains. 15% on capital gains if you're between 48,000 and 96,000 married, filing joint, or 64,000 head of household. And you're in the 20% bracket up to income over 533,000 or $600,000. So again, just know that capital gains tax thresholds are graded. You don't pay the same thing depending upon how much money you make. Another big hot button, I thought it would be good for us to kind of talk about this, was Section 199A, or qualified business income. This came about from the Tax Cut and Jobs Act. Basically what this is, it is the net amount of income that you show from your business. If you're running your business as an S corporation or sole proprietor, whatever that net amount of profit is in the business, there is the potential that up to 20% of that net amount could be taxed at zero rate. It must be a pass-through entity, and you actually take it off at the shareholder level. It is not taken off at the corporate level. If you're an S corp, you actually get it on your personal tax return. So you've either got to be a sole proprietor, a partnership, an S corporation, an LLC, PLLC, or an LLC, PLLC tax as an S corporation, which we see a lot of CRNAs doing. But again, there's a caveat, there's a catch. If you are what they call a specified service, trade, and business, SSTB for short, including the vocations of being a CRNA or my business as well, there is a phase out depending upon how much money you make. So if you're single, that phase out's 197,300 to 247,300. Married, filing joint, 394,600 to 494. This is a great opportunity for tax planning here, because if you can lower that income enough to qualify for this, There are potential ways to do that. You need to be cognizant of that. And there's other things you need to be thinking about. If you lower too much, then you're cutting yourself out of QBI. If you don't lower enough, you're cutting yourself out of QBI. So there's a lot of planning around this. But just be aware, if you can get 20% of your income taxed at zero, that's a very, very big tax break for a lot of CRNAs doing 1099. The other thing, I mean, this hasn't changed much, but I see a lot of CRNAs get tripped up on this. Remember, you can deduct a home mortgage interest on the first $750,000. We're seeing a lot of CRNAs, who have mortgages over 750 right now. If you're married filing separately, it's 375,000 of indebtedness. If you itemize, you basically are able to take this off on your taxes up to that amount. But remember, it must be your primary mortgage or your secondary mortgage. If you get a refinanced mortgage, it's only up to the original loan amount. Remember, I said they make things clear as a bell. A lot of complication around this. A lot of people don't understand it. But if you get a second mortgage or a home equity line and you don't use it for home improvement, you use it to buy a new vehicle, then that interest is now non-deductible. So just be cognizant of that as well. A lot of states changing tax laws in the last year. I threw some of these states up. You can see the trend is continuing to be down across the country. My home state, North Carolina, we went down 25 basis points, which is great. We'll take more of that. But a lot of states are continuing to look at their state tax rate, and the trend is down across the country right now. All right, here's something I'm going to quickly cover because I see a lot of CRNAs getting this wrong. If you work in several different states as a 1099 independent contractor, every state has different rules around this. You could owe income taxes in more than one state. In fact, if you work in a state that doesn't have the next bullet point a reciprocal agreement with that state, meaning you don't have to pay taxes if you work in that state, the two states have worked together to work that out, then you will probably owe tax in that state. I know a lot of CRNAs are working in other states, they don't file tax returns there. You should be doing that. It's really where the work is performed is where you should be paying tax at, which means you're also going to have to file a return in that state along with your home state. So kind of best practices, make sure you're tracking your time and income by state. You really do need to keep detailed records on this. A lot of states are coming after people. If you own an LLC or PLLC, remember, if you work in another state, state laws are very different from state to state. You have to establish what's called a foreign entity in the state that is not your home state. That way your LLC, PLLC is recognized in that state. This is a pretty complicated area, but I thought it was something that we see enough of this not being done correctly. Make sure you understand the rules on this if you're working in multiple states. And if you are, make sure that you're doing things right. Other things to recognize, 2024 tax filing deadlines. Obviously, we're in the middle of tax season right now. Remember, your partnership or your S corporation return is due March 17th. Your personal returns are due April 15th this year. It's actually on the 15th. If you extend your corporate return or your partnership return, it's due September 15th. And if you extend your personal return, it's due October 15th. Quarterly estimates are due April 15th, June 16th, September 15th, and January 15th. So a lot of CRNAs are having to pay quarterly estimates. Make sure that you know these dates. All right, last but not least, I'm talking fast because I'm trying to get through this because Sharon's going to yell at me. But the home office deduction, we see a lot of CRNAs being able to utilize this. There's two ways to do it. There's the simplified method that basically says, however many square feet I'm using as a home office, if it's 20 by 10, 200 square feet, you multiply that by $5, you get a $1,000 deduction on Schedule A, which is an itemization. If you don't itemize, you don't get this deduction, okay? Or the standard deduction is another way to do it. You take a percentage of the home office based upon how many square feet you have in your house. A little more complicated. You must keep records of that. You can also take depreciation for a portion of your house. But if you do that, just remember that if you ever go to sell it, you have to recapture that. So more complicated. The majority of people we see are taking the simplified method. So Sharon, how'd I do?
You did good. I want to bring up also for those of you who don't listen to Beyond the Mask podcast, we have a CRNA personal finance series on there where I interview Jeremy on some of these questions that have been coming through the Q&A. And I'd like to tell you also, you get Class B credits for that, and you can get 40 Class B credits. Through every 4-year cycle. And so not only will you listen to the brain trust of an expert like Jeremy Stanley and get some of this information, but you write them down and you get Class B credits for those because I just pulled it up on the computer. You can go to beyondthemaskpodcast.com and you can see different ones. And what brought that to mind was talking about the backdoor Roth because we did a podcast on it at one point. So take a look at that.
Yep. Great point, Sharon. Now we're going to transition to John Culberson. And John, batter up, last but not least here. We're going to be talking about malpractice insurance decisions. And, one of the big ones that is on my mind is, what do you see in as far as growth in the number of CRNAs who are getting their own med mal coverage?
So we continue to see growth in the number of CRNAs that we insure. When we're particularly CRNAs who identify themselves as being part-time, 1,000 hours to 500 hours a year. We see that proportion is growing. Both full-time and part-time CRNAs are growing as a number of insureds, but we see the part-timers growing faster. About half of our book by number of insureds are folks looking for less than part-time or less than full-time coverage, and that fraction of the total is growing faster than the total, than the size of the full-time, the folks looking for full-time. So the way I think about it is the fraction of folks of CRNAs looking for career flexibility through part-time work, the less than full-time work, is growing, and it's growing faster than what we see is for the market as a whole. Sharon, you're muted.
Sorry, guys, I'm looking at the questions trying to multitask. I am a baby boomer, so what challenges do CRNAs face when moving from work as an employee with their med-mal coverage provided by their employer to one where they must purchase their coverage for their work, such as being a 1099?
So there's some obvious ones like, you have to do the purchase yourself. You're moving from a world where all that was handled by your employer. Of course, that's an expense. Most insurers will allow you to split the cost of the policy. The policies are typically annual. Split the cost over 10 or 12 payments, but something to budget for. Another challenge is just at renewal time. It's not when you first start, it's a year later or 10 months later, you have to renew. And you do not want to allow your insurer any chance to change your price, refuse to insure you by not renewing your policy and then begging for the insurer to post-date the coverage, which they don't have to do. So, before the beginning of your second year of independence, definitely make sure that you're well underway with the renewal process. There's some less obvious things, like ensuring that your company, we've talked about incorporation, LLCs, et cetera, making sure that that's part of your med mal coverage. And whoever you're buying the med mal from, can help you with that. But you want to make sure that you're getting the liability limiting features of your incorporation. And so when you do contracting for the work that you do, when you enter into an insurance contract, so you want to make sure that the name of your company is listed on the insurance policy. As well as when you're contracting during the year, making sure that you're contracting as you're a corporate entity rather than an individual. Because even though you might have an Inc. or an LLC, it's possible to contract as an individual, and so it is preferable to make sure that you're contracting using your company name, both for your insurance and everything else you do as a small business owner. We talked a little bit about the benefits of perhaps putting the cost of an automobile inside your company. You'll want to make sure that you're buying the other sort, the non-medical malpractice insurances. You have to make a decision. Are you going to buy personal auto or commercial auto for that car? Does your small business need errors and emissions coverage? Your insurance professional can help, and tax professional can help you think through, those sorts of things. And then those are the not so obvious things. The least obvious is and this is a benefit of buying the insurance yourself. You're in a different position to manage your own career. When you're covered under your employer's plan, you don't have much say as a healthcare professional in the settlement of a claim. Your employer's insurer or your employer's self-insured plan takes the reins, and you don't have much, as an employee who's not paying for the insurance, you don't have much to say. But you, as a 1099 buying your own insurance, you have the opportunity to control your professional reputation in a different way. If you think that your career will span decades, the decision around how a particular claim is settled can affect you for decades. It can affect the price you pay for insurance. It can affect your professional reputation. And when you buy the insurance, the malpractice insurance yourself, there are a number of plans that have claim settlement provisions where it's called generically consent to settle, where you can where the insurer can't settle the claim unless you agree to that the settlement protects your professional reputation. Not every plan has that, insurance plan has that, but you have the ability to tell the insurer, no, I'm not comfortable with the settlement structure. I would like it, I would like you to, preserve my professional reputation by making certain changes. And that's only something that you have access to when you buy the insurance yourself. And if the plan that you buy has consent to settle, and if you remember to use it years later when if there's a claim.
John, if I can interject now, this is exactly what AANA offers, the consent to settle, which is the beauty of the policies that are offered within the AANA. Am I correct?
Yeah, you're 100% correct. You know, our company is owned by ANA, so we demand that our insurers have this provision because we think it's very, very important. The tell for this, you know, when you start the conversation with, oh, you need a consent to settle on your insurance policy, it just seems like insurance mumbo jumbo. If you ask that, when I ask CRNAs the question, well, if you're covered by an employer's plan, have you seen instances where the professional reputations of doctors and CRNAs have not been protected during the settlement process? Most people would, you know, that I talked to said, yeah, we have seen that. So this issue of protecting your professional reputation through these consent to settle clauses, we think is very, very important. And it's one of the nice things about running a small business. You can choose to purchase policies like ours that have that. Not very many have that that provision because the insurer wants to settle for lowest cost to them generally. And that might not always line up with what the right answer is for your professional reputation.
Hey, John, also, can you talk for just a minute, because, you know, CRNAs, if they have LLCs or PLLCs set up, or PAs or S corporations, whatever it is, I mean, should they be naming that entity on their malpractice insurance policy?
For sure. And when you do that in any sort of contracting, my advice is use the full name, not the DBA name, not a colloquial name. If your name and if the name of the company ends in LLC, then use all the letters and consonants in the name. You know, that's very, very important. And you should always ensure that your insurance documents are insuring your LLC Inc. You know, the company that you that you created, always. And then when you're named in suit, if that happens, make sure that the attorney, which is being paid for by the insurance company, is ensuring that the suit is brought against the company rather than you personally.
Yeah, good point. Good point.
John, can you kind of explain briefly the difference between claims made versus occurrence?
Sure. So an occurrence policy will cover a period of time, and it covers and the period of time is it's typically a year, but then the coverage is for when the event, the loss event happens within that period of time. Occurrence. That's an occurrence policy. There's also claims made where it covers a year, but it's determined by when when a claim is brought against you or your company. That may sound like the same thing, but they're very, very different. One thing to watch out for is that a claims made policy frequently is fewer dollars per year, okay, than an occurrence policy. My strong advice is to stick with the occurrence policy for this reason. If you have to move from a claims made coverage to occurrence, you're going to have to pay for an additional bit of coverage called a tail policy. And that is the price you will pay for that is generally much greater than the difference in premium you were saving through claims made. So do not think that this year's lower claims made premiums are really saving you money in the long run. If you exit the business, you're going to need tail coverage for suit on that will for claims after your retirement that are not covered by your claims made policy. And generally, it's speaking as an underwriter, as a chartered property casualty underwriter, there's a lot of insurer risk for pricing that tail coverage, and it's generally a lot more expensive to buy that conversion, that tail coverage. It's better and more efficient and a lower price, even using even discounting the payments you make. It's more efficient to stick with occurrence. We sell occurrence. I strongly recommend an occurrence, sticking with occurrence policies. It makes it a lot easier to change your mind. And if you want to work as a W-2 employee for someone for a period of time, it's very easy to switch if you're covered by occurrence. If you're covered by claims made, you're going to have to buy this additional tail up coverage, and who knows what you might end up paying for that. And that's generally not paid by the new employer.
Hey, John, what trends are you seeing in coverage? And I know that, we've talked about this before, but I know one of the trends that we've seen over the last few years, obviously depending upon what state you're in, is the increased cost of med mal policies. Do you see that trend continuing, and are there other trends you're seeing in the med mal industry that would be of note to our 1099
Sure.
listeners?
So I'm seeing a couple things. One, so the most interesting for the audience is increasing price. Okay, why? The insurers speak they'll say some form of, well, the claims that we're seeing more claims and more expensive claims. But to dig a little deeper, inflationary expectations for medical malpractice tend to cause insurers to raise price more frequently. I think, I would say we are entering a period of higher inflationary expectations. So we should expect insurers to continue to raise price on us. That is a trend. What I'm also seeing for CRNAs generally, in a world where as a class, we are being supervised less. There are fewer entities in the room covered by medical malpractice. To the extent that we are more successful not being supervised as CRNAs, I think that will tend to increase the premiums for us. Why? Because plaintiffs, it's my experience as an underwriter of med mal, plaintiffs bar want to sue doctors generally more than nurses. Okay, and if there's no one else to sue, they'll sue the CRNA. And if you believe that story, to the extent that we're being more successful removing physicians from the room, from the event, it'll tend to increase prices for us. I'm not making a comment that I'm assuming that the likelihood of an adverse event is the same as it's always been. It's really an issue that when an adverse event happens, plaintiffs bar can decide who to sue. And what they're really looking at is the strength of the case, and all things being equal, they prefer to look at or sue less sympathetic actors like doctors and large institutions. To the extent that we, as a group of CRNAs, work more independently, the target is to some degree is on our backs more frequently, and that will tend to change price. I'm also So I'm seeing that that trend. So I would some years ago, med mal insurers might have gone 7 years without touching price. I'm seeing that across the board, all the insurers are taking rate, and the inflationary expectations will cause them to continue to want to increase price. The other trend, yeah.
I'm sorry, John.
Yeah.
Go ahead. Finish your thought.
Oh, the second trend that we're seeing is that we're seeing some insurers in the marketplace asking CRNAs to, in the application, to agree to their own, the insurer's modes of practice, codes of practice, guidelines. And we're seeing we're seeing CRNAs being asked to agree anytime during the insurance policy to meet with a team, a risk team from the insurer, and agree to follow whatever that meeting says. So we generally, when I ask CRNAs, have you read carefully the application? The answer comes some form of, no, not really. The trend that I would ask CRNAs to watch out for is where you're agreeing to things in the application that might feel uncomfortable. The practice has worked very hard to come up with rules and codes of conduct, which you're held to. You don't need an additional set of rules that's formulated by some insurance company. I would look askance at those insurers that force you to follow, in addition to everything else you have to follow, their particular practice guidelines. So be careful of that. Watch, and you'll see that particularly in insurance applications. We don't have those requirements in our work. We see that with COPIC, our risk retention group's policies, and some others. Sharon, did you have another question?
You know what? I forgot it.
Okay.
So sorry. But one thing I do want to say about the AANA insurance is it's very easy. The website is high powered, and you can get your insurance quickly, efficiently. You get updates. You know when it's time to pay your premiums. I cannot say enough good about the whole process with AANA insurance. You do have to be an AANA member, but it's just a wonderful service that we offer to our members. And for anybody who knows anything about the history, Peggy McFadden, one of our past presidents, is the one who got this up and running many, many years ago. So we are coming down to the end of this. John, is there anything that you need to add to this? I will tell everybody again on Beyond the Mask, there's a whole episode on malpractice insurance that you can go to and listen to. But is there anything you would like to conclude on, John?
Just that the typical person that CRNA members will talk to on the phone has more than 10 years of experience advising people about medical malpractice. That is leaps and bounds over greater than what is typical in our industry. And secondly, if you have questions even about, your current, even if you're not our customer, we're very happy to chat about medical malpractice. If you have just very basic questions, we're very happy to chat with our members and, and guide them. We're very happy to provide that service.
Do you
Even if you're not
still
our customer.
offer the service if you are a W-2 employee and you get your med mal insurance, obviously is provided by your employer, you guys will take a look at that?
Yeah.
Okay.
Yeah,
Well,
we're very happy to do that.
another thing that y'all provide, and you probably mentioned it at the top, and we've received some questions from people who are just kind of dipping their toe into 1099, and that's the moonlighting policies,
Right.
right? Which are
Yeah.
great policies to cover you outside of your W-2 job.
And those policies where you're dipping your toe, your career toe, into part-time, into moonlighting, are harder to find in the marketplace because they're lower in premium, right? And we are owned by AANA and not for profit. So we think it's critical to offer those sorts of policies because it gives CRNAs career flexibility. And that goes to the bottom of a lot of what we've been talking about, future trends, ongoing trends in the CRNA work marketplace. So we think offering these policies that are fewer dollars for fewer hours, right? Make it easier for CRNAs to dip their toes into the 1099 world, or retreat from an hours perspective from full-time to something smaller and then pay a lower price. We're very happy to offer that. That is harder coverage. Fewer insurers offer that. Many of them want to pay only offer full-time coverage because the premiums are much higher.
Thank you, John. So as we wrap this up, Tracy, do you have anything you'd like to add?
No, thanks for having me. And, hopefully I wasn't too much of a Debbie Downer. I mentioned, graduates are increasing. 1099 is definitely not going away. Sharon, I don't have your 35 years. I'm only on 25 years in anesthesia. I've seen the cycles come and go. Always going to be a demand for CRNAs, and it's a great profession. And going the 1099 route gives you so much more control over it. So that's a great thing as well too. I did misspeak. I Googled it. The baby boomers are 61 to 79 right now.
Told you.
Thank you, Google, for that. But yeah, thanks for having me, and hopefully it was a good discussion, and hopefully we answered the questions that were asked.
Yeah.
All right, Jeremy, what would you like to add to this conversation?
Well, I think I said a whole lot today, but I think this is a needed thing. There are a lot of CRNAs out there who want this knowledge about where 1099 is, where it's going, and we're hoping to be a resource. That's why we started the 1099 CRNA Institute with AANA, is to be a resource, get these questions answered. Again, a lot of CRNAs aren't as business minded as Tracy is, as a CRNA, and they want to have a resource where they can get their questions answered, and make sure they're getting the right information. So that's why we started this. Again, we're hoping that we can kind of build on this and do these kind of updates along the way as things change. And this is the inaugural one. So Sharon, what would you like to say as we close?
Well, many of you on this webinar have already enrolled in AANA's 1099 CRNA Institute, and it's a comprehensive educational series. It provides in-depth guidance on business structure, legal and tax implications, and essential resources for independent practice. You can get 22 hours of CE credit for doing the curriculum. If you've not enrolled yet, you can find out more information on the AANA website. Thank you for joining us tonight for this insightful discussion on navigating the 1099 CRNA landscape. We hope you're leaving with valuable knowledge and strategies to help you succeed in 2025 and beyond. I know this was just a grass tops look at 1099. The curriculum within the CRNA Institute is very, very in depth. We've brought in content experts You have Jeremy Stanley, who is an expert and lives and breathes this daily, and is the only person I know who multiplies license plates going down the road and then divides them back to prime numbers. I don't know what the heck he's thinking. But I want to give a special thanks to our expert panelists, Jeremy Stanley, Tracy Young, and John Culbertson, for sharing their expertise. If you have any additional questions or need further resources, feel free to reach out. Stay informed, stay empowered, and continue advocating for your success as a 1099 CRNA. The last question, and I don't know the answer to this, are we going to send this out? I will look into that going forward. I will tell you we do webinars like this monthly within the 1099 CRNA Institute, and some of your more specific questions could be addressed in that type of format, because basically it is getting into the mind of Jeremy Stanley or our content experts on those monthly webinars, which are very intimate and about an hour long once a week. I know that this recording will be up on that, but I will check into if they plan on sending this out. Anything you'd like to end on, Jeremy?
No, I was just going to say, we'll get with ANA. I'm not sure if they're going to send this out or how they're going to utilize it, but we'll have them send out an email to all participants so you know whether they're going to supply this for that. There was another question: did we get CEUs for attending this meeting? We did not apply for CEUs for this meeting, so the answer to that one is no. So, but. Thank everyone. We hope you have a great night. Hopefully you've learned something tonight. Again, Tracy, John, thank you so much. Sharon, thank you as always. And I think it's a wrap.
I think it is. Good night.
Night, everybody.
Thanks, everyone.
Good night.